Okay, I think we are operational. All right, we're going to get rocking and rolling this morning. See if you guys are here. Let's get maybe some hashtag coffee break in the chat. And all right, I think we're good. So welcome everyone. Welcome to the Construction CPA's Coffee Cafe. I am Lisa Raish. I am the Construction CPA. We are dropping the hammer on cash flow problems for contractors with outsourced accounting so you can build things that matter. And this week's topic is best practices or tips for construction accounting or construction bookkeeping. And it's going to be a little bit different than your traditional bookkeeping in that the biggest difference is what you're really looking to do is you're looking to manage your costs and your profitability on your individual projects. So if you are a housing developer, you want to manage the costs on that house that you're building. If you're doing renovations in people's homes, you're doing a kitchen renovation, you want to manage all the costs on that renovation versus not just the overall picture of profitability in the business, but you want to ensure that you've got profitability on each of your jobs. So that's a lot of what we're going to focus on today. A lot of what the tips and the things that I'll recommend or I'll talk about are really towards ensuring that you've got good, solid, accurate numbers when you are kind of pulling together your costs and developing out your profitability on your projects. So again, the difference between traditional accounting and construction accounting really is that it's project accounting, which costs are assigned to which contracts. And it's primarily going to be your labor, your materials. And there's also going to be some overhead charges that you would assign to the projects that costs that aren't directly associated with a project, but overall are really what supports the projects that you're doing. Again, you're still going to have your accounts payable. You're going to have your accounts receivable. You're still going to have payroll, right? But you're going to have further detail in that you're going to have job costing. Maybe you're going to have change orders. You might have progress billing. So you billing your clients throughout the progress of the project. You'll have customer deposits. You're going to have profitability reporting, not just on the overall entity, but you want to have profitability reporting on each individual project. Again, using a housing developer, if you're putting in a subdivision, you're putting 25 houses, you want to ensure that you are profitable on each individual house and not just the overall project. But again, you want to look at the profitability of the project of a house in this particular example, and even some clients get even deeper into their profitabilities. They want to ensure that major components of, say you're a housing developer, the major components of building that was your foundation within budget, was your framing within budget, the electrical, the plumbing, so on and so forth. And that's really you're getting a deeper level of your accounting than you are in just doing traditional like books, kind of cash in, cash out that you would with, say, maybe someone who's in the service industry or in a different industry. It really is important that you keep track of this because you have in construction, you tend to have a lot of financial resources out there, as well as you're trying to meet a timeline. You've conveyed, for instance, to a homeowner that you're going to come in and you're going to renovate a kitchen, and you've given them that timeline. So you need to manage your costs at the same time that you're managing your finances and managing your timelines to ensure that you're staying profitable on the jobs and that you're not running into any cash challenges, which is a pretty common occurrence in construction. It tends to be one of those things where all of the costs associated with doing the job aren't really considered. And therefore, when you're looking at the profitability, it's actually an inaccurate view of the profitability of the job. And so that's where a lot of times construction or contractors tend to get into cash crunches, is they're not really considering all the costs. The other challenge that has become more and more apparent in construction in recent years is just timing of payments. So for instance, if you are in, let's just say, the commercial space, and you're doing commercial construction, payment dates, payment times, it could be upwards of 90 days. So you're waiting to get paid 90 days, but your subs and your team and so on and so forth, your material, your vendors for your materials all want to get paid. And again, that creates other cash challenges. So that's why it's so important to keep track of your job costing, and why that's something that you're going to hear me talk about over and over again. It really does create and help you create a healthy business so that, you know, you can continue going from job to job, that you're not kind of, you hear about it far too often, you know, kind of stealing from Peter to give to Paul, stealing from one job, right, financially to get this other job going. It's a common thing. You hear about it all the time in construction. You read about it in the news. It's sadly, it's a side of the industry that is unpleasant. And of course, so that's the side of the industry that you typically hear about, sadly, in the news, is when somebody gets ripped off because a contractor, you know, couldn't afford to finish the job, doesn't have the money, so on and so forth, doesn't have the appropriate resources and time, and hasn't really allocated it correctly. So the biggest thing is you're going to do your job costing and your project budgeting. So you're going to go out, you're going to quote on a job, you know, or you have an idea of what it's going to cost you to do that job. That's your budget. That's your project budget. As you are incurring your expenses against that project, you want to be comparing what you anticipated your expenses to be against what your actuals are, right? So that's the job costing, and that's the budget to actual that you're using as a comparative. And those are the things that, as you're working through the job, you want to get ahead of before the job closes, so that you aren't really blindsided at the end of the day that a job has been at a loss, especially when you're in these longer term contract jobs. You're doing a job that's 3 months, 6 months. You don't want to wait until month 6 and realize that the job isn't profitable. You want to get ahead of it and understand that in month 1, you've got a challenge, you have a problem. What is it? What can we change? But again, those are the things. You're doing the job, you're doing your budgeting at the beginning, and then you're doing your cost allocations. You're assigning your costs to the jobs and doing that comparative throughout the life of the job. Like any other, you know, accounting, bookkeeping, you're going to have your cash and your accrual. So a lot of our clients, for tax purposes, are cash basis, so dollars in, dollars out. But for actual business development, understanding profitability of the business and so on, we tend to run our clients for the day-to-day operations as accrual basis, right? So it's, when did you incur the expense? We record it. When did you earn the revenue, and so on, so that we can actually see and we can match up the revenue and the expenses more appropriately, so we can understand whether or not the jobs are actually profitable. Under the accrual method for construction, there tend to be a couple different ways. You've got your completed contract method. So that's, you take all of the revenue at the end of the contract. There's also percentage of completion. So again, you're taking some portion of the revenue throughout the project. Some of them are going to be milestones driven. So again, when we hit specific milestones, you're able to invoice and so on and so forth. And that's when you are recognizing your revenue. So again, for tax purposes, you might be, if you're under, say, 25 million in revenues, you might be cash basis. And again, you know, dollars in, dollars out for tax purposes, but for true business, understanding what's going on in your business profitability, we always recommend that you go the accrual route so that you can match up your revenue and your expenses together. You know, especially when we're looking at the projects and we're tracking these projects, we want to determine whether, as you're moving through the project, whether it's profitable or not. There are a number of products out there that you can use for job costing. Builder Trend, that tends to be one people know. Jobber, Notify, Autodesk, Procore, Job Nimbus. There's a ton of them. There are so many that I can't even mention all of them. What I will say is you want to look at what you need to get out of that product. So for instance, someone who is a developer and who's building houses may be in a different product and have different needs in their product than someone who is, say, an electrician or a plumber and is going to multiple jobs a week and is looking to track something differently. So for a developer, a number of the products now that they're using, there are client interfaces. So a client can see the progress of their job. They can see the invoices that they've been sent, how much they've paid. In some cases, the portals that the customers can see, they can see pictures of their project and so on and so forth. They can communicate with the contractor. That's a wonderful tool if you're on a longer term project. If you are, say, that electrician or that plumber that's coming to, the property today and going to another property tomorrow, whether it be a commercial property or residential property, you may want something different. You may want your electrician or your plumber to be able to create an invoice for the customer in the driveway or in the parking lot of the building before they leave. So there's an invoice that's gone off to them before they've even left the property. That might be something that you're interested in if that's the type of business you have. So when you are looking at these products, you want to understand exactly what they offer and what you need to get out of them. We find with a lot of the products, they're great for the contractors. They can, in some cases, some of them be terrible for the accountants. We just don't get the reporting we like to get out of them. That doesn't mean that they're not a benefit. It just means that a lot of times the products have been created for ease of use for the contractor, which again, they're the ones that you want to get. Again, if you're using it, you've got the buy-in, you're going to continue to renew the subscription or buy another license or whatever it is. So they want you as the contractor use it. The other thing to consider is that if you have someone in your business who is doing your accounting, whether it's outsourced to someone like us, or maybe you have somebody internally doing it, you do want to look at the accounting reporting that you can get out of these products to ensure that you're at least getting the minimal that you need to really understand where, kind of looking at that budget to actual on each one of the projects and understanding the profitability versus just kind of that ease of use for kind of the end user. But, a lot of times, a lot of the cloud products are relatively easy to use. There might be some ramp time where you have to learn how to use it or kind of get everybody in your business using it. But for the most part, they tend to have lower upfront costs. The softwares are automatically updated. So you're not installing a product on your computer. You're not, getting the updates you'd have to pay for with some of the older, the older softwares. And then if you didn't get the upgrades, the product didn't do what you wanted it to do and so on. With a lot of these cloud products, those updates come automatically. So you're not paying, you're paying for them with the subscription, but again, you're not paying for them after the fact. So they'll back up your data in real time. So again, a lot of these products, you put the information in, it's saved in the cloud. You can go back, right away and look at something you just put in. It's not something where you kind of have to save the data and back it up and so on. And in many cases, the cloud products probably will save you money. Again, if you have a number of users, you want to look at how many users you have. Are you paying for individual licenses? What does the license cost look like and so on and so forth. So again, those are things that you want to look at. You want to scope out a job costing or a project management system like you would with any other system that you're going to use in your business. You want to make sure that it's appropriate for what you need. One of the biggest things that we find with a lot of these, with construction in general, again, and I talk about it all the time, and sometimes I feel like that's all I talk about, but cash flow really is a challenge in construction. So you need to ensure that you are managing your cash flow. And if you're tracking your revenue and your expenses through your job costing product, your project management system, usually the two of them kind of wrapped up in one, again, you can keep a greater handle on kind of where the cash is ebbing and flowing. Like anything else, you want to ensure that you are invoicing your customers on a regular basis. I have one of my clients who we're trying to get them out of they're waiting too long in some cases through the progression of a project to invoice the client for, the next piece and so that creates cash flow challenges. On the other side of it, I personally just had a construction project done in my home, and it was very clearly laid out to me how the payment was going to work, when the payments were going to need to be made. The contractor clearly sent an invoice every time there was a payment ready. And again, that helps keep you on top of, your cash flow challenges, because the dollars are going out just as quickly in many cases as they're coming in. So you want to ensure that you are consistently bringing the cash in over, in order to cover those expenses. And again, you want to ensure that you are in fact budgeting out what a project is, what it's going to cost you, and breaking it down into the individual pieces, and then comparing your cost against what you've actually spent so that you can begin to understand, did you have a cost overrun? Was there something that you didn't consider in your original bidding that maybe moving forward, you're going to have to consider, because now it's become something you see kind of over and over again in every project or every other project. Or again, doing the job costing and doing that comparative, that budget to actual, helps you to not only stay profitable, but get ahead of issues that you've run into on one project where maybe you're running into over and over again in projects. Now you can see, oh, it's going to cost us X% more for this one particular item. I need to consider this and put this into my next bid, so that you, again, aren't continually running at a loss. And you don't want to wait until year end to look at your overall profitability of the business to determine that you did, or, you had a loss or you're not profitable. These are things, especially in construction, that you want to look at on a project to project basis. Every industry has specific regulations. So you want to make sure that you're compliant with whatever regulations are in your industry. Some of you are licensed, so there might be licensing requirements that you need to keep ahead of. Again, those are all kind of outside of the core of like what we do from an accounting standpoint, but those are all things that are crucial for your business. You want to make sure that if you have any compliance required for your insurance, again, you're compliant with that, and so on and so forth. So again, keeping ahead of any kind of specific regulations in your own industry. There are some tax implications for construction. There can be tax credits and things that are available in construction that may not be available in other industries. One of the other things that we see kind of religiously with clients is we may be cash basis, dollars in, dollars out for tax purposes, but we're working with them and they're running their business on an accrual basis, for running the day to day. So there's going to potentially be a difference between the tax basis and the accrual basis. And so you want to understand what those are, because you could have, again, depending on when the dollars came in and went out, you could have a year that's profitable for tax purposes, right? You're showing a profit, but maybe for accrual, you aren't necessarily profitable, but it's just the timing of when the cash flow kind of came in and went out. So it's something to think about and look at and try to prepare for as much in advance as you can, because you want to look at not only the profitability of the job, but how is this going to affect you at year end? You received a bunch of money at year end, but the expenses haven't gone out, or vice versa. You've put out a bunch of money at year end. There's revenue hasn't come in. Your expenses are in this first year, but your revenue is in the second year. So again, there could be tax implications to that you do want to think about. And those are the kinds of things that we want to prepare clients for as we're working through the year, looking at kind of cash basis as well as accrual basis for reporting purposes, kind of see where they're falling, not just profitability for the business, but where do we think they're going to fall for tax purposes. Again, like anything else, lean into the professionals that are supporting you to make sure that you are staying compliant. You are compliant with the insurance company, you're compliant with the from a tax perspective, you're compliant legally, so on and so forth. So tap those people that are supporting you to kind of help you keep up and keep on top of those things, so that you stay ahead of what's going on in the industry and you're staying ahead of the compliance and staying compliant. Because again, like anything else, when you aren't compliant, it does get very expensive. There are penalties, fines, so on and so forth. So again, you want to make sure you kind of stay ahead of that. Like anything else with accounting, you want to keep on top of it. You don't want to wait. You don't want to wait until February to do all of your accounting for the prior year. That's why we highly recommend not only the job costing, but you're doing the job costing on a monthly basis so you can see where you're falling month to month. It's, not only important for profitability, but you want to get ahead of potential tax implications. Are you going to potentially have a tax liability at year end? You don't want to find that out in February for the prior year, because if there are tax saving opportunities out there, in many cases, the only tax planning you're doing in the next year is paying the tax. There really is very little planning. So you want to make sure you get ahead of that before year end. And that is about it for this week. So if you guys have any questions, please drop them in the chat. We'd absolutely love to hear from you. As always, we love seeing you here every Friday. So everybody have a wonderful, hope you have a wonderful weekend. It has been a long week. So as always, please join us back here every Friday at 10 a.m. for the Construction CPA's Coffee Cafe, and we'll see you next week.